Hello and welcome to the Joe Ligato Show. I'm your host, Dr. Joe Ligato, and today we're going to be reviewing an article from Reuters on how China takes next step in currency globalization with some Hong Kong stock prices in Yuan. And we see here that China's gradual internationalization of its currency will shift to its next leg on Monday, when about 24 Chinese companies start trading in their home currency in Hong Kong stock market. Okay, so the dollar and the euro are facing a lot of problems currently because of the fact that other countries do not want to trade in those currencies anymore. And this de-dollarization is extremely important. Countries not only don't want to trade in that currency, but they also don't want to keep that currency in reserve because they're scared that the United States dollar is not going to be worth as much anymore. Now, what the United States is doing is, instead of providing confidence for its currency by keeping to its agreements, by having products and services that back up the currency. No, instead of doing that, they're punishing countries that move away from the United States dollar, and they are cannibalizing their own allies. So what you're seeing is that countries are moving away from the dollar, sure, but they're moving away from the euro even more. And so that's because of the fact that the United States is making sure that these countries don't use the euro and use the dollar instead. So any countries that were trading in euros and were stockpiling, using in reserve the euro, now they're using the dollars instead. And so the United States is cannibalizing these other countries. And China is making sure that, at least in their own stock markets, specifically this one in Hong Kong, that at the very least they're trading in their own currencies and other currencies of countries that are favorable to them, such as the ruble. The Hong Kong stocks such as Alibaba and Tencent, two very major companies, are among the 24 stocks which will be priced and traded in both yuan and the Hong Kong dollar under the dual counter model on the Hong Kong Stock Exchange from Monday. And so this article is from a few months ago. The scheme is targeting overseas investors with yuan holdings initially, but will later include mainland investors via the Hong Kong China Stock Connect link up later. Offshore yuan deposits in Hong Kong alone are estimated at some 833 billion yuan, which is $117. Fund managers say the step reflects Beijing's desire to expand the use of yuan outside China and provide another avenue for yuan-denominated investment, thus reducing the risk of capital outflows chasing higher-yielding currencies such as the United States dollar. So for people who don't know, the Hong Kong Stock Exchange is one of the largest stock exchanges in all of Asia. That is because of the fact that Hong Kong was controlled by the United Kingdom back when the United Kingdom was the sole superpower throughout the world. And Hong Kong was one of their crowning jewel achievements. And it was also really a central point throughout Asia. And so it made the most sense that that is where the stock exchange occurred. A lot of countries, both Western and non-Western, were willing to do trade, make deals in Hong Kong, whereas they weren't necessarily in mainland China. Eventually, a few decades ago, mainland China got a hold of Hong Kong, and the United Kingdom somewhat peacefully gave up control of Hong Kong. The United Kingdom just could not control its overseas territories, and China was growing more dominant, and so they wanted to kind of appease China by giving them Hong Kong. China has had a lot of problems with Hong Kong because Hong Kong could be a backdoor for a lot of problems, a lot of dissidents, and you're seeing that with the Hong Kong riots that occurred, with the rioters violently attacking people, and the Hong Kong police, law enforcement officers use a great amount of restraint, far more restraint than American law enforcement officers tend to use in quelling that rebellion. But it was very clearly a Western-led rebellion. They talked about democracy, talked about human rights, but in reality, we've seen that time and time again. It doesn't lead to any better form of democracy. It doesn't lead to better human rights whenever these color revolutions happen. And so China recognizes that Hong Kong is it's a double-edged sword where on one hand, they get a crown jewel, a very highly industrialized island, but in exchange, it can be a backdoor for these subversive colonial elements to attack mainland China. And so China is trying its best to leverage the benefits of having Hong Kong while lessening the downsides of Hong Kong. So China is pushing one, internationalization to avert geopolitical risks and reduce reliance on the dollar. So that obviously makes complete sense as well. The United States has shown time and time again, Venezuela, Cuba, Iran, North Korea, now Russia, and now China, that the United States is willing to use international mechanisms. It's willing to use the United States dollar, which is the primary trade and reserve currency, in order to punish its enemies. And China recognizes this and is trying to shy away from using the United States dollar in order to make itself resilient to any further economic sanctions, any further trade war that the United States wants to initiate. And so for that purpose, China needs to use their currency more widely. They need to push their currency to be used more widely by other actors throughout the world. Ding said the scheme is a major milestone and expects the model to be expanded in the future beyond stocks to bonds and even alternative assets, boosting overseas asset pools denominated in yuan. See, the thing is, it's really difficult to use a currency like the yuan for a number of reasons, but China is trying to make their currency more valuable as a trade currency. It's interesting because typically throughout history, the trade currency has also been the reserve currency as well. I don't think that necessarily has to be the case. There might be certain reasons you would want the trade currency to be something separate from the reserve currency, but obviously you'd want it to be exchangeable from the reserve currency into the trade currency. But it's just something to think about. I do see elements of China and their digital currencies being something that they want to trade in, but they don't necessarily want people to have as a reserve currency as well. A reason you might not want it as a reserve currency, just for people who are interested, is you want to have some understanding about how much money is in circulation at any one point in time in order to make sure that you can hold inflation down. People don't typically realize this. They think that, well, if you have $100 in circulation, then that's the amount of money trading hands. But you also have to think about, it's not the amount of money that is in circulation, but also the velocity of money. So how quickly is money changing hands? So if person A purchases something worth $100 from person B, and then person B then purchases something from person C for $100, that money has changed hands twice. And so there's actually $200 that has been changing hands within whatever set period of time you want to have there. And so that can actually increase inflation if money is changing hands particularly quickly. And so there are some reasons to think maybe the reserve currency, maybe the money that people sit on and don't use, maybe you'd want that to be something different from a trade currency. There's some aspects of this we're seeing with digital bank currencies, central bank digital bank currencies, that lead me to believe that the trade currency might be something separate from the reserve currency. An example of this is expiration date on various currencies, so you have to use it within a certain amount of time. If the central bank digital currencies that do arise end up doing something like that, that would tell me that they want to make sure that they have a good understanding about how much money is in circulation and how quickly it could be circulating in order to have more levers of control for inflation. But again, if your currency has an expiration date and it has to trade hands in a certain amount of time, you don't want that to be your reserve currency. So just something to think about going forward. But anyways, China is figuring out all these problems while we are making things more electronic, while we are coming up with cryptocurrencies, central bank digital currencies that will really change the game, I believe, in terms of how currency and how trade is conducted. How currency is used and how trade is conducted is the way I should put it. The initiative comes amid a steady stream of bilateral yuan-denominated deals China has struck with trading partners from Chinese oil purchases in the Middle East, which is a huge deal, might I remind you. The entire reason the United States is so strong is because of the United States dollar. The United States dollar is really only backed up by two things. One, trade of energy, such as through oil, has been done primarily through the United States dollar. That's why it's called the petrodollar. The other form of backing up, of supporting, of propping up their currency, the United States dollar, is through military force. And military force has not been working out particularly well for the United States. I mean, look at how things went in Afghanistan recently. The United States is not doing a particularly good job in Ukraine right now either. And so the United States dollar is not backed up by military force, or at least it's not backed up by as much military force as it used to be. And in terms of the petrodollar, you see countries like Saudi Arabia very clearly pivoting away from the United States. And so the petrodollar isn't there anymore. So seeing that oil purchases are occurring in not only the Chinese currency, but really any other currency aside from the US dollar is a really big deal. Do commodities trades with partners from Brazil to Russia. So China is trading in rubles. Russia is trading in, or no, China is trading in yuan. Russia is trading in rubles, et cetera, et cetera. And then they might keep those currencies as a reserve currency for later usage. So when you have countries that actually create value by creating products and services, then you might want to store their currency in order to use it to purchase things from them in the future. The United States doesn't really make anything anymore. I mean, I was looking at it, it's things like they make pharmaceuticals, which these are various ways of keeping people addicted to drugs. The United States has a huge drug problem. They make military equipment, but it's not particularly good military equipment. We're seeing that in Ukraine. They make farming equipment, and they grow a lot of produce. But that's almost it. I really can't think of very many products that the United States actually makes. And so using the United States dollar as a reserve currency and trade currency doesn't make overly much sense. Beijing has retained close ties with Moscow despite the invasion of Ukraine. I believe that the invasion is justified, although I don't agree with military force. I don't think using violence is a good way of doing it, but I can completely understand why the special military operation happened. The United States dollar remains the dominant global currency, accounting for 42% of global payments. The yuan share is just 2.29%, but it is up from 1.95% 2 years ago. That also does not account for the fact that the euro has been collapsing. I believe it went down by single-digit percentage usage for global payments. I think it was like at 41% and went to like 28 or something like that. I'd have to go back and see to be sure, but it was double-digit decline in euro usage. So the United States dollar is being propped up by the cannibalization of the European euro, which they would have been used almost interchangeably. The same people that would have used the euro would also use the dollar. And so the United States is just saying to these various businesses, governments, other types of organizations, hey, don't use the euro anymore, use the dollar, in order to prop up the United States dollar as the dominant global currency. A significant breakthrough in China's efforts to promote use of the yuan came this month when Pakistan paid for its first government-to-government import of discounted Russian crude oil in yuan. When a currency is internationalized, it's not only used in trade, physical goods, or services, it also has to be parked in investment vehicles. So you have to use it for investment purposes. For foreign investors with yuan holdings, buying shares in Hong Kong without really going into mainland China will be a much, much easier way to park your holdings of this currency. So a lot of people, a lot of countries are hesitant to do business in mainland China, but they're still willing to work with Hong Kong because Hong Kong is, to a certain extent, considered a separate entity, even if it is a part of China. What is it called? One country, two systems. That's what they're using for Hong Kong. And they plan on doing the same thing for Taiwan as well. Yuan incentives. Under the dual counter arrangement, investors can choose to trade a stock either in Hong Kong dollars via the Hong Kong dollar counter or yuan via the Renminbi counter, with market makers providing liquidity and minimizing price discrepancies. Most of the first batch of stock eligible for yuan trading, which include blah, 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 are not listed in China. Fund managers expect a lukewarm interest in the yuan counters initially, given near-term risks, including a weakening yuan and wobbly stocks as China's economy struggles. I don't know what they're talking about here because China is the entire world is struggling right now. The United States is doing its absolute best to prop up the world economy by throwing money at the problem. But a recession is very likely to happen. And I don't think the United States is going to recover from that recession. But if you look at things, China is doing the best of nearly all the countries in the world right now. So yes, China is not doing as well as some other years, but it's still doing far, far, far better than the United States, United Kingdom, Germany, places like that in modern times. And demand will pick up over time, they say, for this currency. Mainland investors, including mutual fund companies like us, have genuine incentives to trade Hong Kong stocks in Yuan. Our fund returns and dividends are priced in Yuan, so using their Renminbi counter can remove foreign exchange cost. Forex exchange just means foreign exchange cost, and shield us from currency volatility. There are many other, okay, so what they're saying there is they can avoid some fees if they do their business directly in the renminbi. Hold on a second, okay. There are many other reasons to trade in Yuan, said David Friedland, Asia Pacific Managing Director at Interactive Brokers, which offers Yuan trading services. There are a lot of political uncertainties these days, so you may want to hold Yuan rather than US dollars or the Hong Kong dollar, which is pegged to the US dollar. So again, the United States dollar, there's a lot of reasons to be concerned. What is the United States dollar backed by? You have to think about that, because I can't think of really anything that the United States dollar is currently backed by since the petrodollar is gone, since military force isn't as threatening as it used to be. So what exactly is the reason that people would use the United States dollar as a trade currency when they could just be using their own currencies, which provides further value for their own currencies because it adds extra demand for their currency abroad. See, people don't know this, but for most countries, when they want to print money and use money, they're either punishing their people who already have their currency by increasing inflation, or they have to create further demand abroad. So you either have domestic demand or international demand. And United States is really one of the few countries that actually has like really solid international demand for their currency, but that's going away. So what does that say for their ability to print dollars and add value to their bottom line? I would say that it's telling that the United States dollar is doomed to fail in the long term. It is a little bit interesting because at the making of this video, the price of gold is down, which is odd because given the likelihood of a recession within the next few months, the price of gold should be sky high right now. So interesting times ahead. Is it maybe that instead of people holding on to gold during a time of crisis, maybe they're going to hold on to some type of cryptocurrency instead. So just something to think about going forward. So that is our article from Reuters. I don't know how to pronounce that. Reuters, I believe it is. It's on China takes next step in currency globalization with some Hong Kong stocks priced in Yuan. So thank you for listening to this video. Please give us a thumbs up. Please subscribe to our channel. Please add comments to our comment section. I review all those comments and I try to respond whenever necessary. And thank you for sticking with me, and I hope you have a good rest of your day. Bye.